Rod White for Mining Journal, and I have the pleasure of introducing my friend Gary O'Connor, who's the Chief Executive of Moneta Gold. And I think it's essential to declare that I was the former chairman of Moneta Gold, and I put the projects together, and Gary has earned my great support by delivering these projects towards production. And Moneta, I think, is probably the most undervalued gold development company in the Americas. What do you think, Gary?
No, thank you, Rod, for the introduction. And I think, yes, I think we probably are one of the most undervalued gold companies. We've delivered a lot of ounces. We're at a total of 12.8 million ounces in the Timmins camp of Ontario, Canada. We've put together a very robust preliminary economic assessment, which outlines the development scenario for the project, and a great location, good jurisdiction. So we've got plenty of upside here for our shareholders and future investors.
I would have thought you have exceptional upside because your market capitalization is 135 million and your net present value at $2,000 gold is 2 billion. So I'm not aware of any other companies that are as undervalued in gold development. But the problem is with development is expensive, and to get it to the stage of pre-feasibility is going to cost more money, but you're going to have a lot more ounces by then, are you not?
Our current focus at the moment is not on adding ounces, it is on upgrading ounces. However, we've had some good success in sampling old historical core that previously had not been sampled. We're adding big wide mineralized intercepts. We have been drilling out beyond the pits. We're continuing to hit good wide zones. We're infilling pits. So we do see the ability to add ounces, but our focus is upgrading, de-risking the resources and continuing to add value. Look, we've been a fast moving project, adding ounces, economic studies, putting a team together. We already commenced our pre-feasibility drilling before we'd finished the PEA. That was in preparation for fast tracking the PFS, which we're doing now. So the market is catching up to us.
I don't think the market's catching up because already you've spent the money, and so you're assaying historic drill core, and you've already paid for most of the exploration program, and that is going to upgrade from 4.3 million to a significantly higher number of indicated ounces, and indicated ounces make a lot more sense when it comes to working out a mine program.
Well, exactly. You can't do a PFS unless your resources are measured or indicated. You can't put a reserve together, a bankable feasibility, a bankable reserve. So we need to do the infill drilling. We need to upgrade the resources, de-risk it. That will add significant value to the project. We have plenty of ounces. We have the ability to expand the throughput. We have lots of optionality on how we sequence both the underground high grade, the open pits. So we've got lots of options there. As pointed out, we're adding ounces within current economic open pits, and we're potentially expanding them, but we're adding value. And look, our share price has performed well over the last 2 years. We've outperformed our peers. We've outperformed the GDXJ. We've gone up over 300%, but there's been a bit of weakness lately, but we're out marketing. Gold price is up, and we think we'll see a good correction here coming up.
Well, theoretically, if you upgrade 4.3 million inferred ounces up to, say, 9 or 10 million indicated ounces, then the value per ounce is going to be somewhere north of $80 rather than $8, because that's the level at which the larger companies are taking over the developers. Sabina was taken over at $87 US an ounce, and Great Bear was taken over what has turned out to be $220 an ounce. How can you be $8 an ounce for very long?
No, correct. You see some big prices there paid, and historically those numbers are not out of whack with what has been paid for defined resources in Canada. People will pay, in general, about $150 an ounce. We are not currently going to drill out all of our ounces to indicated. There's no
You don't
point.
need to.
There's no point in that. We just drill out the mine plan, the first 11 years.
And in the first 11 years, your IRR is?
That's right, so robust 32%.
Right,
Excellent, and
32%.
2.6-year payback,
Right.
1.1 billion Canadian.
And then you've got the high-grade underground to bring in behind it.
That's right. We blend that with the open pits. That gives us our 1.1 billion valuation, and that's, remember, it's $1,600 US gold price.
Yeah, I use $2 billion at $2,000, and I'd like to see 10 million ounces indicated, and then we can all make a huge amount of money and retire.
Look at today's gold prices, you would do a project, a significantly larger project. We use 1,600 at a 0.78 exchange rate. That's 1950 US Canadian dollar gold price. Today the gold price is 2,750 Canadian. So
yeah, but I can say
there's
it,
a
you
lot of
can't.
upside there. Yeah,
You're extremely undervalued, and I think the upside is between 5 and 10 times over the next 2 years. And I really wish you every success in achieving this.
well, we're looking to deliver,
Okay.
and we've delivered in the past, and we're looking to deliver again in the future. So
Okay. Thank you, Gary.
thank you.